Hey everybody, it is Friday, June 19th. Welcome to this episode. My name is JJ. You're watching Bull to the Bust. The biggest stock market bubble of all time is what many investors and hedge fund managers are saying. We're going to talk about who said that and why they're saying that. The Fed's James Bullard says the economy is not out of the woods. Well, we think that the economic catastrophe really hasn't gotten started yet, thanks to the Fed just propping things up right now. We're going to talk about what Mr. Bullard has to say. Countries dumping the dollar and the ultra wealthy running to gold. That's right. Let's start right here. This is out of Business Insider. The markets, most of the major indexes in the red today. Dow Jones down 0.8%. S&P down 0.56%. The Nasdaq down 0.03%. So let's think about this. This is the biggest stock market rally coming off those mid-March lows when the pandemic started. The biggest stock market rally, the biggest gain in 3 months of all time during the biggest economic downturn, the worst unemployment numbers, the most business closures, on top of the social unrest that we're seeing. So the biggest bubble blow up in the stock market at the same time as we see the biggest, most devastating events unfold in the real economy. Gold caught a slight bid today, up over 1% to 1743. Oil continues to push its way towards $40. We now are at $39.43. And we also see silver today closing out just above $17.60. Now earlier this week, CNBC did an interview with Sven Hendrich. He is the lead market strategist at Northman Trader. And when asked about the stock market, here's what he had to say about this huge, enormous stock market bubble that we're in right now. Quote, "The Fed has really created a massive asset bubble here in the last few months. The lender of last resort has become the lender of entire resort, and no red line shall remain uncrossed. The Fed has basically created a gambling casino at this point, and all of the gamblers has moved in. From my perspective, the danger here is that the Fed is overdoing it and zombifying the economy. They're in the process of inserting itself deeper into markets, and that makes the Fed itself too big to fail, and the Fed losing control over the asset bubble is now the biggest risk factor in the economy." Unquote. So the Fed is zombifying the economy. Of course, we've been talking about that here for many years. But how insane is it that everyone in the finance world, everyone that's paying even part attention to this, realizes that this is an enormous Fed-induced bubble, not just the stock market, but everything is being propped up by the Fed in easy money and manipulation. Just our last video report, we talked about 100,000 people now have missed or stopped paying their loan payments. So it's not just the Fed injecting trillions into this economic system, it's also the banks, including credit card companies. Even utility companies have put these due payments, these loan payments, these utility bill payments, they've put them on hold, and that is keeping this entire economic system from completely imploding. And when it does implode, when they finally let this thing go, this is going to be the worst collapse in the history of the world, in my opinion. Now, you can argue that it's already worse than the Great Depression. Yes, when you look at the numbers, it absolutely is. The unemployment numbers, well beyond Great Depression levels. But back then, they didn't have the tools that they have now to keep this entire system from imploding. Right, back then, in the Great Depression, people had to physically go wait in soup lines to get food. Now people can just get money entered right into their checking account, deposited right into their account. They can get an EBT, a prepaid card to go out and buy food. And yes, in many parts of the U.S. we are seeing food lines. In some cases we see miles of cars waiting to get a bag of food. But think about how much longer those lines would be if it weren't for the electronic stimulus payments, the direct deposits right from the funny money bankers. And think about all the millions of people that stopped paying their rent and their mortgages, and how they may likely be using the money they normally would have paid the rent and the mortgage with to buy food. A lot of people are just in survival mode right now. but it's all being masked. It's all being hidden by the freeze up and the manipulation right now. Consumers are carrying the most debt we've ever carried in the history of the United States, but yet all they have to do is freeze these payments and keep everything appearing normal for now. But how long is that going to last? You might want to ask yourself, and that's one of the key topics on this channel, one of the key things that we focus on. What is the timing? When is the Fed going to pull back and just pull the rug out from under this entire fake, propped up economic bubble where people don't have to pay their mortgages, they don't have to make their credit card payment, they don't have to pay their utility bills or their car payments, because now they have the scapegoat, the scam-demic scapegoat is in play. So now everybody's just looking for a handout, they're looking for a free pass, instead of actually blaming the underlying factors that led to this bubble, that led to this debt in the first place. People have accepted debt as the new normal. Nobody's questioning the debt. People are just asking, well, how can I skip my payment, or how can the government help me? Can they send me a check? And yes, I agree, the government should send out checks. They're sending trillions of dollars to the banking system, to the corporations, to the trading houses. Send checks out to the people. I absolutely agree. But here's what's going to happen when they pull back on this, and eventually they want people to pay for this. They're going to try to raise everybody's taxes later and say, hey, look at all the spending we did to save you. Now you're going to have to pay for it. Now we need 50% of your paycheck. Now we need 60%. Now all of a sudden U.S. has turned into France, where you have 80% taxes and you have a revolt in the streets. But now, of course, we have revolts in the streets for other reasons. So it's also going to be a cover-up for this massive financial meltdown that we were engineered into. All right, let's talk about what St. Louis Fed Bank President James Bullard had to say. And it sounds to me like he's way behind the curve on this, but here's what he had to say, quote, "I definitely don't think we're out of the woods. We're still at high risk levels here. Any crisis, I think you have to keep in mind that many things can happen, many twists and turns can occur." He continues, "If you get massive business failures, you'll face depression risk or financial crisis risk, or both," unquote. Well, James Bullard seems to not have noticed, but we already have massive business failures. If not for the shutdown, how's about all the thousands of businesses that were destroyed, not just financially but physically? But he says if we get massive business failures, we're going to face depression. Well, we already faced unemployment numbers that were beyond the Great Depression. It's just being propped up with stimulus and the artificial propping up of the economy. So Bullard's out there warning that bad things can happen, but bad things have already happened. That's why we had to see unprecedented intervention into the markets by the bankers. Now, staying on the topic of unprecedented money printing, stimulus and debt accumulation, Russia's out there now. They've gotten rid of 96% of U.S. debt holdings. Countries are dumping the dollar. The dollar's days are numbered. Yes, it may hold strong in the near term, but eventually we're going to see this currency, what we call the U.S. dollar, this fiat paper backed by absolutely nothing but foolishness and false confidence and the might of the U.S. military. Well, the dollar's days are numbered, and the wealthy, they are well aware of this. We know central banks have been hoarding gold, buying precious metals. Recent Reuters article right here, the world's ultra wealthy go for gold amid stimulus bonanza. Excerpt out of this article: as stock markets roar back from the virus-led rout, advisors to the world's wealthy are urging them to hold more gold, questioning the strength of the rally and the long-term impact of global central banks' cash splurge. Questioning the strength of the rally. This stock market rally is a last-ditch effort to keep this economy from showing its true face. And we know that pensions are reliant on the stock market. We know 1 in 3 workers has a 401k account. We need to keep those accounts propped up. The government does anyways, to keep this appearance, to keep the panic from getting even worse than what it already is. And now we have a bunch of day trader, a bunch of new Robinhood account users who are coming in and riding this bull But I think what's going to happen is a lot of these traders who are coming in and just making this easy, thoughtless money just by going long on everything, a stock index, when the rug gets pulled out, they are going to be too late to the exit. So when the rug does get pulled out, when the Fed steps back and stops propping up this Ponzi scheme, it's going to be the retail investors that are going to get hurt. We know pros like Warren Buffett, he's been out of the markets now. He's been in a cash position, the largest cash position he's ever been in, now for over a year. He sees the writing on the wall. He decided not to pick up pennies in front of a steamroller, in my opinion. He got out a little too early. A lot of people feel like they're genius investors right now, a lot of these retail investors, and they are ultimately, most of them ultimately are going to get burned. Greed is going to come back to bite these people in the you-know-what, and these retail investors, they're not going to be able to sell in a millisecond like the algorithms, the hedge funds, are going to be able to get out and leave a lot of these retail investors holding the bag. All right, so again, money managers are advising the ultra wealthy to shift more into safe haven assets, precious metals, gold and silver. Quick excerpt here. Some are now channeling up to 10% of their clients' portfolios into the yellow metal as massive central bank stimulus reduces bond yields, making non-yielding gold more attractive and raises the risk of inflation that would devalue other assets and currencies. So it's interesting because that's what I'm at right now. I'm about 10% into precious metals. Now, if I knew for sure there was going to be hyperinflation, I would be 40, 50%, maybe more into precious metals. But, and this is just me, this is my analysis of this, not giving any sort of investment advice. I still think there's going to be deflation before we see the real inflation or the hyperinflation. Boom and bust cycles, ride the bull, prepare for the bear. You're going to have some metals in your portfolio. If the deflation is so quick you don't get a chance to capitalize on it and we start going into hyperinflation, you're going to have some of your 10% of your portfolio already there and ready in case you don't time it exactly correctly. If we do see deflation in assets, including property, real estate, that's my thing. That's what I'm holding out and waiting for. But if we see precious metals prices drop, I'm going to be buying more because eventually they're going to print the dollar into oblivion and hyperinflation likely is going to be here. Probably sooner than most people think. I'm still giving it a few more years before the ultimate hyperinflation and dollar destruction hit. That's just my opinion. Thank you for watching this update, everybody. Link to SD Bullion down below. They currently have the best prices, in my opinion. Great service. I did talk about a different gold and a bullion dealer recently, and they're called Golden State Mint. They seem to have a better stock, but as far as prices, SD Bullion's still the place to get these metals for a little bit cheaper. Link down below if you'd like to pick up some, and you also help out the channel by using that link. Thank you everybody very much for watching this report today. Hope everybody has a good weekend. Stay well, ride the bull, prepare for the bear. Bye for now.